So when you hear the term value investing, maybe you think about Warren Buffett. He's a legendary investor with this type of approach. And maybe you've heard of Benjamin Graham. He actually wrote this book, The Intelligent Investor, which is 600 pages, all about this idea of finding companies that the market is underestimating. These are companies with real growth, real revenue, real profit, and it's something where if you can find them, the price is an attractive place, knowing there could be a lot of upside and a lot of potential. But what if you don't want to do all this fundamental analysis and you're not really sure how to go about it? And maybe you definitely don't want to read 600 pages. There's a way to do this and invest this way with a simple single ETF. It's called VTV, the Vanguard Value ETF. And it's full of companies that fit this style of approach. And we're going to talk about it right now. All right, welcome back to my channel. My name is Joshua. I built and sold a tech company, and now I really focus on investing and sharing the lessons that I'm learning and the ones I've learned with you right here every week. So if this video is helpful at all, please hit the like button and subscribe. I'd really appreciate it. So today, let's start off with a definition of value investing. This is really the approach of trying to find these companies whose intrinsic value, their worth, could be lower than the stock price that's trading in the market, because stock price is not always a reflection of a company's underlying value. And this goes both ways. Whether a company is massively overvalued, you usually see this in super high growth tech names, or when there's a company that's just being undervalued, there's a lot of fear in the market and the price is not reflecting reality. And so that is this idea. Can you find these pockets in the market where companies have great growth and revenue and balance sheets, and they're able to weather the storm over time? It's a good place to put your money. And you figure this out using some fundamental analysis, looking at things like the PE ratio. That's the price per earnings ratio. So let's actually take a look at VTV and think about those concepts applied here. VTV was established in 2004. It has a 0.04% expense ratio. Something else that's really cool about Vanguard is they have this sliding scale that indicates risk. So it's 1 to 5. VTV is a 4. I'm guessing that's primarily because it's made up of stocks. In fact, about 340 stocks, which we'll talk about. VTV also has about 150 billion or so of net assets. And if you compare that to something like the Nasdaq 100 ETF, ticker symbol QQQ, that has roughly about the same, 153 billion or something in assets. I like to look at that because I want to know, is this an ETF with a lot of volume, with a lot of investors putting their money here? Is it something maybe less credible? And I think generally with Vanguard and these types of broad funds, you're going to be just fine. But let's take a look at some of these fundamental metrics, starting with the PE ratio. So VTV has a cap-weighted PE ratio. The average of the fund is 15.7. And if we compare that with QQQ, we actually see that they have a cap-weighted average PE ratio of 21.8, so significantly higher. Next, if we look at the price-to-book ratio, this is basically the price per share of a stock divided by its book value or net worth per share. We see that the PB ratio for VTV is 2.6, but if we jump over to QQQ, it's 5.86. Something else I'd like to look at is the dividend yield. So when we look at VTV, it's actually paying about 2.4% dividend, which is really great. QQQ, on the other hand, is about a 0.69% dividend yield. And you can see that every metric that I've cited, VTV has an edge. All right, next up, let's take a look at the portfolio composition, starting with the sectors. The number one sector in VTV is actually healthcare. And I was shocked to see this. Healthcare makes up 21%, followed by financials, and then followed by industrials at 19.2% and 13.3% respectively. If you compare that to QQQ, the Nasdaq 100, that is 47% is in technology, where technology in this fund is actually just 6%. And that is shocking. I think of that difference, right? The Nasdaq is so tech heavy, and the value ETF has such a small fraction of tech. I think that's one very big distinction. If we look at the top 10 companies that VTV holds, you will see a lot of healthcare names here. United Health is the number one. Berkshire Hathaway, going back to Mr. Buffett, is number two. Then you have ExxonMobil, J&J, JP Morgan. So you have some of those finance names. Chevron there, you see that's another company that Warren Buffett has put a lot of money into. And then a Pfizer and AbbVie. Something really interesting is that in VTV, the top 10 companies, they represent about 22.5%. Where if we go back to QQQ, those top 10 companies represent about 48.7%. So just a bigger chunk. I think you can see a theme here, right? A broader distribution of the sectors, a broader distribution of the weighting of those top 10 companies, and then all those fundamental metrics we talked about earlier. All right, so let's take a look at VTV and the price performance over some different time frames and see how it performed. First up, we're gonna look at the year-to-date chart. So as I'm filming this, VTV is down about 3.6%. And now we'll take a look at this chart that compares VTV with QQQ. And you can see that the Nasdaq 100 is down 29% year-to-date. Let's go back to 5 years and see how VTV performed. It's up 39.4% over 5 years. Comparing that again to QQQ, you can see that that is 82% for the Nasdaq 100. So it's a pretty big gap in performance over time. This chart shows that. Look how high the Nasdaq 100 had accumulated up through the top of the peak. But now that gap is closing. Something else I always like to look at is the peak of the market, kind of back towards December, January of 2021, and how things were going 5 years prior to that, just before things started to crash. And you can see that VTV was up 64.6% from the 5 years prior up into that peak. But QQQ, the Nasdaq 100, comes in at 253.5%. So just a massive difference. I mean, nearly 4x the upside. But things always correct themselves and revert to the mean. And I think that speaks a lot to that technology boom, over the last half decade. All right, so the last question is, do I personally own VTV in my portfolio? And the answer is not yet. I do believe I'm going to open a new position because I think I want to diversify a bit away from technology. I'm still focused on this theme of ETFs, moving away from single stocks after I got punished for that in 2021. And we'll see how that plays out. I'm very happy, though, as I do some of this research, to see a fund like VTV where I can get that kind of consistent dividend, fairly slow and steady performance, in addition to some of my more risky long-term bets. All right, let me know in the comments if you are an investor in VTV, and we will see you in the next video. Thanks.